Welcome back. You're with us here on Editors Roundtable. Let's talk about China, right? I mean, the big engine of global growth for the last 20 years or so. Now, perhaps, things are starting to falter a little bit there, and I'll explain why. The title is, Can China Avoid Japanification? Now, I'll explain what I mean by Japanification. I don't mean the Japan of today, but I mean the Japan of, the last 3 decades or so. The reason we're kind of picking up on this is because this week we got the Chinese both CPI numbers and producer price index numbers, and both confirm that the Chinese economy is now in a bit of a deflationary zone. Actually, it's outright deflation in China, right? And hence, people are once again asking the question. It's not a new question, it's an old question. People are asking the question whether China and the Chinese economy is going down, what we saw in Japan during the 90s, and then, of course, the 2000s as well. But let me just explain what happened in Japan. When we say Japanification, what do we really mean? So quickly, in the late 1980s, Japan saw a gigantic asset bubble, right? If you remember, there were stories which said that the imperial palace in Japan was worth more than all the land in California. I mean, it's a true story. The stock market, the Nikkei 225, went up 4 times between 1985 and 1989. In 5-year period, the index went up 4 times. What was this bubble based on? It was centered on commercial property and equity markets. Commercial property was a really hot thing, as I just explained. It was driven by highly accommodative monetary policy. It was also, and the corporate sector overborrowed, it overinvested, and overhired as well. But as it always happens, bubbles burst. It's inevitable. So the bubble burst in 1990s, and it basically damaged banks. I mean, they're the ones which get hurt the first. As a result of that, corporates cut back capacity, they cut back hiring, they laid off jobs, and of course, they cut back on debt as well. As a result of which, consumer spending was hurt extremely badly. And then Japan basically, in the late 90s all the way into early 2000s, saw moderate deflation. Prices were not rising, prices were falling. Consumer inflation expectations also dropped quite meaningfully, which is that households did not expect increase in salaries. They did not expect increase in prices they paid for goods and services. By the way, we are still in that position in Japan where the Bank of Japan, even now, 30 years later, is trying to get inflation back in Japan back above 2% on a consistent basis. Actually, they've got it above 2%. The aim now is to keep it above 2%. Now, what are the similarities, right? Why are we saying China and Japan, Japanification? The similarities are here. So first is the housing market, which has been the problem area for China, as we all know. Once in a while, we hear of these big Chinese property companies going bust. The correction did not start now. It's been on for a few years, but it's arguably structural. It's not just a cyclical kind of slowdown in the Chinese property market. Japan, of course, saw the biggest crash in the property market there. Corporate debt is the other one, if you can move on. For the total non-financial credit to GDP got to almost 300% of GDP, in China by the end of 2022. Back in the 90s, the number was similar for Japan as well. Similar numbers for household debt, both for China now and Japan back in 1989, which was the peak. Population is the other one, right? The share of population of people above 65 years in China and Japan, you can see the numbers for yourself, China now and Japan back then. External front, and this is important and interesting. Just like what we saw, what we're seeing in China, which is China enjoying a huge trade surplus with the US, and that raising concerns and tensions. Japan had the same problem, and that basically led to US trying to hit back, striking back in terms of tariffs, in terms of asking for more open access to markets in Japan back then. All of that, it's a repeat. We are seeing what we saw back in the 80s, but what we're seeing in China now. Challenge to the US, right? Rise of Japan and China now is a challenge to US as the largest economy in the world. And as I said, the US is fighting back now. It fought back then as well. And this is the reason why many fear that the single largest sort of incremental contributor to global growth, which is China, perhaps may go into a bit of a funk, may go into a bit of a prolonged down phase, which is what we call Japanification. But it's not all similar. It's a big subject, right? I'll just leave you with a little bit on the optimistic side, how China differs in a more positive way as compared to Japan of the 80s and 90s. First is, I mean, China's got much lower urbanization, which means, there is a greater room for people to move from rural to urban areas, which means larger potential for productivity increase. It's got a huge domestic market, is a technological leader. EVs, for example, China leads the world. China's capital account is not fully liberalized, right? Which means that there can't be a fire sale of distressed properties and other assets in favor of assets abroad. And of course, the political system is very different. China can do things which other countries can't do simply because of the political system it kind of enjoys. But it's a topic which I suspect we will keep coming back to over the next many years as this plays out. Let me put this to Andrew, if he has any thoughts on this one, because if this were to play out the way many people expect, I think it'll have implications for for many, many things. Andrew, briefly, your comments.
So a few things, Prashant. A great analysis, by the way, because I remember Japan falling very sharply as well back in those days. But I think a couple of things slightly different here. I think the deflation is probably more temporary over the next few months. I think you'll see that some of that is more to do with year-over-year comparisons. So I think that the inflation will start to pick up. I think secondly, I think the biggest factor is obviously, whilst you talked about that aging population, let's not forget that there's 430 odd million people under the age of 30. So it's going to be a consumer-led market. And of course, industries across the world will still want to go to Japan. There might be just some, with the US, that kind of geopolitical kind of nervousness, and that's why India is seen as +1. But overall, I feel that it's a big enough economy to get through this, and I think you'll see that the government will make some of the right steps going forward. So I'm not as negative as the comparisons are good, but I don't think I think if anyone looks at what happened in Japan, then the steps that they need to take will be taken very swiftly.
Okay, well, Andrew, we'll let you go on that note. Have a great weekend. Thanks a lot for joining in. And to all of our viewers, have a great weekend. The news continues right here on CNBC TV 18.